Hi, I'm Darnel, Bentz, Senior Wealth Advisor.
Hi, I'm Chang, Senior Wealth Advisor.
Hi, I'm Andrew Grant, Director of Manager Research and Investment Solutions. Thanks for joining us today. We're going to be talking today about alternative investments and private market solutions. We're going to go through some high-level overviews of what alternatives are and what they solve for. We're going to discuss the evolution of alternatives here at the firm. We're going to talk a little bit about client situations and needs for their goals and objectives. And lastly, we'll wrap up with liquidity needs and concerns for clients as it relates to alternative investments. Darnel, you've been here the longest at Kayne Rudnick Wealth Advisors. Over the past 12 years here, how have you sort of seen alts sort of evolving, changing in your clients' portfolios? If you give us a little bit of a rundown, I think that would be helpful for everyone to understand.
Sure. Thanks, Andrew. I think in over 12 and a half years, the alternative landscape has changed a lot. When I first started, I think we had a small handful of alternative investment options available to clients. And today it's a very robust platform, as you alluded to, that covers the gambit of alternative scenarios. It can be real estate debt, private equity, private credit, and all different flavors within those broad categories. So the capabilities we have today compared to where we were 12 years ago, it's really night and day what we can do for clients.
Yep. Brian, how about you?
I've been here for a little over 4 years at this point, and even I've seen an expansion of our alternative investment platform. I would say the breadth and depth of our offering have really expanded on an annual basis, and part of the most exciting jobs that I have is matching up different alternatives with investment goals that our clients have, as well as fitting these alternatives within their investor temperament.
Yeah, and as the alternative landscape has evolved, right, I think it's good to take it back a step and understand why, right? We know some of the high-level reasons have been companies are staying private longer, right? We're seeing a lot more volatility in the fixed income market. We're also seeing ways of tax deferral statuses, happen with alternatives for our clients. So there is this legitimate evolution. There are legitimate evolutions in the vehicles that these also come in different types of wrappers for people. So again, staying at a high level, we can help clients solve a lot of these situations that are coming to us for help with, right? And that can typically be in the form of income. It can typically be in the form of potentially amplified returns. And then it can also be for a diversification and a non-correlation status, right? So, Brian, I'll start with you. Can you give us a couple examples, or at least one, as to how you are using alternatives with your clients?
When investors think of income, they tend to think about dividend stocks or bonds. However, there's this entire universe of private loans that are not available to the public market. And we use strategies such as private credit, asset-backed securities that are making private loans to businesses as well as developers. Some of these are even hard asset securities such as real estate, equipment, accounts receivable. So when I build a portfolio, I'm looking for income generation that is outside of traditional stocks and bonds. And when my clients look at these, they think of these as beyond income generation. It's about risk reduction, it's about consistency and diversification beyond traditional Wall Street.
Yeah, you hit on some great topics there, right? And I think when we're talking about income, private credit and direct lending have been the most synonymous with what our listeners and our clients will have probably heard, right? A lot of those types of loans are no longer made by the banks anymore, not for a bad reason, but just because they have tighter regulations on what they're able to do. But now you're starting to see even public companies, the Intels of the world, that are now tapping into these private asset managers for private loans and circumnavigating the corporate side of it, or something that you will see listed. And we've had a lot of volatility in the bond market. So private credit and direct lending, like you said, have just been great for clients. But Darnel, would you have anything to add there in different asset classes?
No, I think another interesting avenue we hit on income generation from real estate. On the alternative side for real estate, I think there's also attractive options when it comes to 1031 exchange capabilities. Traditionally, investors, when they owned real estate, they could only, if they wanted to sell the property, they pay capital gains. The only other option was to 1031 exchange into another real property. In the last number of years, the expansion of options that are available to those investors now are really attractive. Now, if you don't want to manage an individual apartment complex or an individual rental home, you can do a 1031 exchange into a Delaware Statutory Trust, which owns an industrial warehouse, an apartment building, be invested in that institutional real estate property for a number of years, and then eventually upread into a national real estate portfolio and collect passive income, all the while deferring your capital gains. So now you can get diversified, create passive income, and delay that capital gains down the road. Yep. Where traditionally you didn't have a lot of options when you owned real estate.
Yep, and it's not about just being exposed to equity and fixed income, right? It's about having real assets that can hopefully be inflation protective, right? Providing you a really nice source of income. A lot of the times that income comes in the form of return of capital, which for a lot of our investors and for their after-tax returns is really friendly, right? And these tax deferral statuses, these new vehicles, these new wrappers, these abilities to move away from your investment property or your secondary home, right? There's a lot that goes into it, but it provides great income for people.
Yeah, well, we see a lot too is as clients age, it gets a lot more difficult for them to manage
Yep.
properties.
Yep. No one wants to be a landlord anymore.
Yeah, and the biggest hurdle is they hold on to it because they don't want to pay the capital gains. They know they're going to get a step up in cost basis. Now they can exchange it into a passive income generator and still get the step up in cost basis in those REIT shares. So it's a win-win for those older investors.
And you bring up the key word there, which is shares. You now have operating shares in that company. So where if you just had this house and you had heirs, call it 4 or 5 heirs, that you had 2 that didn't want to sell the property and you had the other 3 that did, you were kind of at an impasse, right? But now with this 1031 exchange, it gives people the ability to sell their portion.
Yeah,
and the other people do not have to be upset about it, right? So I think, this brings us back to how do we think about the landscape of what we offer for what's out there in the alternative land, right? And that's when we bring this full circle to what is the due diligence that we're doing? What are we trying to understand that our clients need, right? It comes in various forms. We touched on the high-level asset classes that we want our clients to have exposure to, right? And we talked about private equity, private credit. We talked about some real estate with Darnel. We also have infrastructure, right? Infrastructure is this great sort of middle ground of inflation protection, real asset, but with a little hint of private equity attached to it, right? And it comes in a very tax-advantaged way. And when we're thinking about due diligence, we love to stick with managers that have very proven track records, right? So for you all, how comfortable are you knowing that we have a research process in place, that we are minding the store with what the alternatives are here? Because it's a large fragmented world of alternatives out there, right? And you're part of the investment committee, right? So you get to be in on all the decision-making processes on what the new investments are that we have on the platform. And again, we look at managers with long-term track records, right? We look for what has been their default rates over time. We look how they've done compared to the publicly traded equity and fixed income markets. But again, how does that make you feel when you're talking to a client about being comfortable about putting them in these strategies.
Yeah, I think behind the curtain, being on the investment committee, it's really enlightening to see everything that goes into the research and the process that we have to find these managers. I think what we're always talking about and thinking about is a repeatable process, right? There's a lot of managers that could be a flash in the pan and they strike gold once, but they can't repeat that. And so we want to see a defined process that's repeatable and gives us confidence that these results that have been great in the past, they'll continue to deliver those for our clients going forward. One area that we didn't really talk about a lot so far is really the growth side of the investment landscape. You alluded to private equity and private infrastructure as the primary growth vehicles that we think about with clients, and I would agree with that. And why we target that is the public investing landscape in terms of the number of publicly traded companies out there has declined in the last 20 years. And so if you really want to expand and broaden your exposure to high growth new businesses, we think that private equity is a really attractive landscape for that. Traditionally, private businesses that were growing and fast, when they were small, they might IPO into the public markets. In the last 10 years, that's really slowed down. The companies are staying private longer. They're going public at much higher valuations ultimately. So if you really want exposure to high growth new businesses, private equity is the only real way that you can do that. And so we feel it's an opportune piece of an allocation for some clients where appropriate to get that extra potential growth kicker.
Yeah, you bring up a great point. There's been a real structural shift in, those what used to be small cap companies that would come out in an IPO, right? They are more coming out in a very high mid cap area to large cap now and just completely bypassing the small cap opportunity. But, you're bringing up the growth areas of our portfolio. Venture capital is something that we do have in some of our investments. Brian, I know venture capital is something you think about, quite a bit. How do you talk to them about those opportunities that we have in some of our investments that will have a slug or an allocation to venture capital?
One of the comments earlier that really piqued my interest is infrastructure. And we're now facing this huge AI wave that's coming, and I'm thinking about first order, second order, or third order impact of this technological wave and how we can profit from it. And one of the ways that I think we have on our platform to really generate some growth is through infrastructure. And infrastructure is the build out of the energy grids, the power supplies to power artificial intelligence. And we need those power now. It's not something that we can wait and delay for 5 to 10 years. And that's a great way to capture some gains in that market space as well.
Yeah. Infrastructure companies, we need to build out AI data centers. We need the power lines to transmit energy from the new plants that they need to build. I mean, the massive build out of infrastructure everywhere in the world is really an opportune thing to get exposure to. And the only way to do that for most investors, there's not a lot of publicly traded options to invest in infrastructure.
Correct.
The way you have to do it is through private infrastructure investments. And so we look for managers that have done private infrastructure globally for years and decades. And that's how we get exposure for clients.
Yep, it's been a real hot topic as of late. But, if we're sort of wrapping this up and thinking about alternatives and the liquidity or illiquidity aspect of it, right? We talked about what some of the benefits are to alternatives. Illiquidity can be a benefit as well. It can also be hard for some clients to wrap their heads around the fact that they cannot sell these investments on a day-to-day basis, or they do not trade on an exchange. So what we've done from a due diligence standpoint and structured the portfolio and the offerings that we have here is we want to give people the ability to have multiple vehicles, right? It can be in your traditional closed-end private equity strategy where you make a capital commitment and you have capital calls over a certain time period, right? And that usually has a fund life of 10 years. Now we have more semi-liquid investments where you do have some liquidity. It can be every 4 months. It could be every 6 months. So how do you guys look at your clients' portfolios and their liquidity needs and explain to them that these are things that you just need to think about, but over time, that illiquidity and that sort of private exposure typically leads to less volatility, non-correlated assets, and hopefully better returns?
When I look at my client portfolios, it's really about account types as well. There's taxable accounts and there's retirement accounts. Certain accounts have different restrictions on when an account is required to make distributions. So position sizing becomes very important on these less liquid investment vehicles. Yes, they do have non-correlated aspects for these investments to fit within a diversified portfolio, but understanding cash flow and understanding when we will have an opportunity to liquidate if we need to is very important in that portfolio construction phase of a client's financial life.
Yep.
Yeah, I think our wealth advisory business, where we take a two-pronged approach of not only doing investment management, but doing a lot of financial planning with clients,
Yep.
gives us the ability to really know the cash flow needs of our clients, the risks that they're comfortable with, the liquidity needs that they have, and to really place these alternative investments in the appropriate accounts and give them the appropriate liquidity structure that they need. Because it is important to think about liquidity. If you can't sell it every day, you need to wait a quarter to
Correct.
liquidate it, you have to take that into consideration. So the alternative piece of a client's portfolio, we tend to keep smaller than their traditional assets to manage that illiquidity. But I think one of the biggest things the illiquidity can provide is it gives you the marks of these investments typically happen monthly. Or less frequent. And so you don't see the daily volatility of the public markets, and that can allow clients to stay in these investments longer, keep them in their seat.
People in their seats.
As
yeah.
we all know, it's time in the market. It's time in your strategy to let that compound. So the more things that we can put in client portfolios to keep them invested longer, that's how we're going to get them better returns.
Well, I think we hit on all the pertinent points here with alternatives in private markets for our clients and our viewers here. And I think we want them to pay attention to what types of vehicles do they have, what's the liquidity of these investments, what are their financial goals, right? And what are their needs from an income or a growth perspective. And in wrapping that up, if we're thinking about, okay, how large of a portion of our alternatives in your client portfolios, is it an overwhelming majority for you?
I would say more and more every day. More and more clients have exposure to alternatives. We have a little bit more exposure to alternatives within their portfolio every day as we have more options, more comfort with the space, and just get to know clients more and more over time.
Yeah. Brian, how about your client portfolios? What would you say that the amount of alternatives are? Is it a majority as well, or a good portion?
Like Darnel, I think it's more and more every day, because one of the most unfortunate things in investing, in my belief, is an investor believing they have a truly diversified and protected portfolio of stocks and bonds, but when markets fail, everything in their portfolio goes down together. And the alternatives that we have don't move in sync with the stock market or the bond market, so I'm always looking for ways to incorporate them into our client portfolios as long as it fits their needs and, again, fits their investor temperament.
That's great. Okay. Well, thank you for joining us today. I think we covered a lot of great topics as it relates to alternative investments and private investment solutions. Please, if you have any questions, reach out to your Kayne Anderson Rudnick wealth advisor or anyone here at the firm. We'd be more than happy to walk through the process with you.